Whew, I'll tell you what, guys, it has been a rough week trying to make videos over here in Miami because of the weather. We're getting just a ton of rain, and I've been watching all day like a hawk for just a moment to get out here in between downpours. So hopefully I'm going to get kind of lucky here and be able to shoot this video before the next downpour. So let's jump right into it. I wanted to start off with all of this data that I've been reading, talking about how the housing market has bottomed out. And I kind of briefly touched on this a little bit in yesterday's video, but this is the information that I really wanted to share for this video because there's just so many things that they're pointing to, trying to justify how the housing market has bottomed. And yesterday we mainly talked about low inventory, but what else is there? Like, what else is there to say that the housing market has bottomed out? Well, let's take a look. The first thing they're talking about is how mortgage rates have been falling, which are good for buyers, which is true. Mortgage rates falling is good for buyers. But what's not good for buyers is the reason why they're falling. The reason why the mortgage rates are falling is because the 10-year treasury is falling, which means that many investors are spooked about the future of the economy right now. With this yield curve inverted as much as it is, it's a huge, big red flashing sign saying recession, recession, recession. So yes, mortgage rates are going down, but the reason that they're going down is not really good. So people that try to paint the picture that it is are really the ones who are out there FOMOing people into the market at probably the worst possible time ever. And Lawrence Yun, the chief economist at the National Association of Realtors, he thinks that the mortgage lending is going to tighten up in the commercial sector, but it's actually going to loosen up in the residential sector. That doesn't really make a whole lot of sense other than the fact that the government buys a lot of these mortgage-backed securities, so there is that aspect to it. But the thing is, guys, I think when the banks start doing all these credit crunches like we're already seeing, it's going to affect residential lending as well, because people that normally would want to get a loan are probably not going to be able to qualify as easily as before. And you can say all you want how the lending standards have gotten tighter and, you know, only the most well-qualified people are getting mortgages. Remember this part of the video I shared with you guys yesterday, talking about how there's a mortgage broker here in Miami trying to get people to buy homes for the smallest down payment possible with only a 580 credit score and not making any payments for the first month and a half or 2 months of ownership. So what is that all about? You know, how is that a good thing that somebody can jump into a home and buy like that? Because to me, that means, that just screams, you know, you're not ready, basically, because people that are really well qualified to buy a home do not need these crazy programs where you get every little tiny advantage to try to get into the property. And the other thing that they mention here is how mortgage applications went up for like 4 straight weeks in a row. Well, now they're going down again, even though interest rates are down, which on the surface doesn't make any sense, except when you think, well, maybe these people have some common sense. Maybe they're realizing it's not a good time to buy right now, even though mortgage rates are dropping and the recession risk is huge right now, and there's a lot of uncertainty out there. You got Ian Shepherdson over at Pantheon Economics. He still thinks that we're going to see another 15% decline in home prices this year. So it's not like I'm the only one out there talking about how home prices are likely to still come down in this environment. But yet you have stories like this saying exactly the opposite, how we've already reached the bottom and it's all going to be uphill from here, guys. The other thing that they point to here is pending home sales, talking about how pending home sales have risen for 3 straight months in a row. Lawrence Yun, once again, is saying how the Midwest and the southern part of the country are leading the real estate recovery, and these are the areas where you're seeing the most pending sales tick back up. Well, we know for one thing that the Midwest is probably one of the only affordable markets left in the entire country, and certain parts of the South are as well. So it's not that big of a surprise that you see a bit of an uptick in these areas. And remember, the other thing is, these are just pending home sales. This does not mean the transaction will close. You see a lot of times these days, because of where appraisals are at and where people's finances are at as far as getting approved for the loan, and now this credit crunch, you're likely to see a lot of these pending home sales not become completed sales because of the nature of what's happening right now. So as you guys can see, I'm playing devil's advocate in this video, and I'm giving you all the reasons why the housing bulls are saying the economy is going to go up and the housing market's going to go up, and I'm kind of just counteracting that with what I'm seeing happening and why I think they're wrong. And this one's just kind of funny because I think it totally confirms my argument as well. They're talking about home builder sentiment, how home builder sentiment is up. The index increased 2 points to 44, and the reading was expected to come in around 44. So more home builders are feeling optimistic and wanting to go out there and build homes for this pent-up demand that's out there. But here's the thing, guys. Demand, I think, has always been there. I mean, what we saw during the pandemic with this run-up in people paying crazy amounts of money for homes and waiving all their rights and contingencies to buy homes, I think that's a pretty solid sign that demand hasn't really diminished, but the circumstances that create demand have, like these higher interest rates and the looming recession and the amount of layoffs that people have been seeing, as well as inflation. So these are all forces that are working against the housing market, and it's not like the demand isn't there. It's just that people are not going to be able to buy under these circumstances. So home builder sentiment going up and wanting to build more homes is actually a good thing for everyone out there who does want to buy a house, because that means you're more likely to be able to get one with less competition. More supply is a great thing right now for the housing market. And there's also a ton of units, that are being constructed right now, even before this survey came out. So if they're going to get out there and start building even more, well, that's just good news if you're a buyer. And kind of right along this next point, the same thing that they talk about here is how housing starts rose 9.8% in February. That's also fantastic news, guys. Housing starts for single-family homes advanced 1.1% to an annualized rate of 830,000 new units, while multifamily housing starts surged 24% to a rate of 608,000. So that's the other part of this too. This is not just going to be good for home buyers, this is great for renters too, because what all of this means is new inventory coming sooner than later, okay? Because these starts are eventually going to turn into completed homes, which means more inventory, more choices for people who need a place to live. The housing bulls love to point to this one, which is existing home sales that jumped 14.5% in February, which is the largest monthly increase that was seen since July 2020. And this is one of their strongest points of why the housing market is coming back. And what I have to say about it is we saw mortgage rates start to go down during this time, kind of like now, but that was also before the bank failures. And because this also marked the end of a 12-month slide in existing home sales, they're looking at this as the beginning of the recovery. But the way I see it is it's just a temporary set of circumstances that can easily be reversed at any moment in time, guys, because the overall trajectory still is things are going down. Even though you might see these slight upticks here and there that might look like there is a recovery on the way, I think you need to see a more longer term trajectory to be able to determine that. You can't just go by 1 month, it's better now, and all of a sudden the housing market's in recovery mode, which is what they're pitching here. Because they do report, which is a fact here, that the median sales price for existing homes still went down 0.2% to $363,000 compared to a year ago. And that's the National Association of Realtor data there. And they're saying how 57% of the homes that were sold in February 2023 were on the market for less than a month. Well, I attribute that to just low inventory, guys. Places where homes are selling that fast, it's just low inventory combined with affordability. Because you can look here in Miami at a lot of these listings that I show you guys, nothing's moving in a month. Everything is taking forever to sell here, and obviously we're looking at these crazy prices for these houses here and in the several millions of dollars. So the amount of people who can even afford that to begin with is very low. So that's another reason why homes like that will sit on the market longer. It's just kind of the name of the game. But like I've told you guys before, when you have a house that is priced correctly and a lot of people in the area can afford it, it's gonna move regardless of what's happening with the market, okay? And then they're talking about how new home sales also increased in February 1.1%, up to 640,000 units, up from January's rate of 633,000. It also says here, which is, at least they're giving the facts, and the other side, that this figure is still 19% below where it was a year ago. So they're using these small incremental increases as reasons why the housing market is in recovery mode. But I think you're going to have to see more than just a 1 month change on all these data points to say that it's in a recovery mode, guys. One thing that they're not acknowledging here at all is the recession. They're not acknowledging inflation, and they're not acknowledging the layoffs, which to me are going to have the biggest impact on where home prices are going to go over the next several years, because all those things are just pretty much getting started. And then we talked about this problem that the Fed has, this huge dilemma with pumping more money into the market or paying a ton of interest on the money they're holding for the banks. That's a problem that hasn't even been felt yet either. So it's just one thing after another that no one even knows what's going to happen with right now. Holy smokes, I knew this was a new listing when we walked by this here, and look at that, lo and behold, it's another flip. They bought this place just in last August for $2.4 million, and now they have it listed for almost $3.5 million. So these guys think they're going to walk away with a cool million in less than a year in a down market. I went over the Miami statistics with you guys the other day, and home sales here are slowing down significantly. And even though home prices in Miami are up year over year, it is going down very fast. And I don't know about being able to flip a property like this for an extra $1 million. Maybe they'll be able to get slightly more than what they paid, but probably not much more than that. And then the last thing they point to here is the Schiller Home Price Index, and they state right here that the index fell 0.5% in January compared to the previous month, but yet it's still up on a yearly basis 3.8%. However, on a yearly basis, the index went up 3.8% in January, which is down from the 5.6% in the previous month. So they're using that as another takeaway of why it's a great time to jump back into the housing market, even though Robert Schiller just came out about a week ago telling people right from his own mouth that if you can wait to buy a home right now, then that's probably going to be a good idea. And that's not me saying that, guys. That is the founder and the inventor of this Schiller Home Price Index. You can do what you want with this information and take either side of the argument that you wish. And you know, I'm indifferent, guys. Whatever you decide to do or you think, it's your own personal choice. No one can ever tell you, including me here on YouTube, when it's going to be a good time for you to buy a home. But in my opinion, there are more warning signs against doing this right now than for it. And with the caveat that if you bought a home now and you were guaranteed you're going to hang on to it for like 10, 15 years, then you should be all right. But if that's not you, then you're putting yourself in a pretty dangerous position, especially if you're on the low end of the borrower spectrum, like these people, you know, trying to get the FHA loans or now need to get the 40-year loan just to save $100 a month. Like if you're that strapped for cash, you shouldn't be a homeowner, guys. You're just not ready. That's the reality that a lot of people need to face, that I think most people don't want to face, because they want to think that they're ready. They want to think that this is the right move right now because there's a small window of opportunity. But I look at it more as a stability move, guys. If you're going to buy a home, the whole reason to do that is to stabilize your life and your family. And if you're stretching every penny, every dollar to get into the home, and if there's one little hiccup and it's all over with, well, how is that any form of stability at all? To me, that sounds like taking on a massive risk and putting your family at risk of being on the street due to a foreclosure. So just think about that before you make your decision, but do what you want. Uh-oh, I'm getting caught in the rain again, guys. This is my last ditch effort to finish this video. As you guys can see, it's almost dark outside. I got totally soaked earlier as I just got blindsided by the rain again. I knew it was gonna come, but just didn't know when. And well, here we are, guys. I am finishing the video in a new spot, and make sure you give this one a like, an A for effort, okay? Because this was probably the hardest video I've ever had to make. I do my best to try to keep the format consistent for you guys. You know, these outside walks, sometimes you can see it's pretty difficult. Let me know if, you know, this happens in the future, if you'd like me to do the video somewhere else. I know some people suggest the mall or stuff like that, or maybe if I just finished it in my home office. I don't know. Let me know what you guys think if we have really bad weather to contend with. But anyhow, what I was trying to say before I got totally rained out is the comments that Ron DeSantis, the Florida governor, said about the citizens insurance. And what he said is that the company is insolvent, and that scared a lot of people when they heard about that, and a lot of people were asking me about it. And it's kind of true, and it's also not true, because on the one hand, if they got hit with another big hurricane, like anytime soon within the next few months, and they had to pay out, they would be insolvent. They would not be able to pay for the claims, most likely. But here's the thing, guys. When it comes to citizens, if there's a deficit and citizens cannot pay all of the claims necessary, they have the power to do what's called an assessment on all other types of insurance throughout the state of Florida, which basically raises premiums on everything. Think of things like your homeowner's insurance, even if you don't have citizens, or your car insurance, or maybe even your health insurance. Like any other type of insurance, they can then raise the premiums on if they don't have the money, okay? And they also have something called reinsurance, which is like insurance for an insurance company as sort of like a backup that they try to have instead of doing those assessments. Those assessments are kind of like the last resort, so to speak. So that's basically what they try to avoid doing, but it's possible that they may have to do that. But here's the thing, even with the amount of reinsurance that Citizens has, it's not nearly enough to cover if there is another major loss. Like for example, it's estimated that the losses from Hurricane Ian, and we're talking insured losses, is around the $60 billion mark right now. And that is just staggering, guys, when you think about it. And if something like this were to happen and Citizens had to pay out this amount, I mean, it would definitely bankrupt the company, and who knows what would have to happen to the insurance rates around here to make up for that. Let's just say all of us Floridians are going to be paying for it, and it's not going to be good. So yes, is it a bad situation? Absolutely. But this whole Florida insurance debacle has been something that's been unfolding here for a while, and it's just unfortunate what's happening here, that we just don't have many options anymore. Insurance companies don't want to write policies here, and you can't really blame them considering we get more hurricanes than any other state, and then we have more fraud than any other state on top of that. So it's like nobody really knows what's going to be the fate of Florida's insurance future, but as of right now, it's not looking too good. Now, a lot of you have been sending me this story about California giving away all this free money in order to help first-time home buyers. And by the way, guys, if anybody is ever curious, the main reason I like picking on California is for a couple of reasons. Number one, it's basically the polar opposite of Florida, so there's that interesting contrast to it. But besides that, the other reason I like picking on California is because I actually love California, guys. I wish California would be different. I wish that they could just get their act together and solve these massive problems they have. And I'm definitely not saying we don't have massive problems here in Florida. In fact, I just covered one of the biggest ones we do have. But you know, when it comes to just regular everyday living over there and the amount that people are taxed, bureaucracy and red tape, when it comes to just trying to live your regular life, and the amount of overreach and control the government has there is insane. And this new program no matter how well intended it is also another example of that. This is an example of a program that, you know, is actually giving money away to people every single month and giving them sort of like a salary, okay? Over in Stockton, California, okay, they're giving select residents, and don't ask me how they decided who gets this little salary and who doesn't, but they're giving people an extra $500 a month. And supposedly this $500 a month they're giving some of their residents are for things like fixing their car if necessary, or having extra gas money, having extra money for childcare, whatever. And I realize that California is extremely expensive. I've been there several times. I know it's not cheap to live there, and the working poor have to be struggling big time over there. But the issue is that California, their solution to everything is let's just throw more money at it. And they know and they can see how well that does not work just by looking at how well that's worked out well for them so far with things like the homeless problem, or that supposed high-speed rail they were supposed to build from Southern California up to Northern California that still never got built and had a ton of money wasted on it, and just things like that that just don't work. And I'm already feeling the rain again, so I'm gonna start walking back towards the car. We may have to cut this one short before I get drenched again. So basically their argument here is if they offer low-income people a regular cash stipend, it's a powerful tool for mitigating income volatility and maximizing people's well-being, okay? And the misconception apparently is that people would stay home and be lazy and use the money to buy alcohol and drugs, and the proponents of a program like this are saying it's completely the opposite. That's not what's happening. People are really using this money to, you know, get ahead in life, or just keep the lights on, okay? And I'm sure there is a portion of people that are doing that, that are using the money to just keep the lights on and, you know, live their lives. But of course, you're always going to have the set of irresponsible people that will blow the money on drugs and alcohol and not do anything productive with it. And this can be seen by looking at a large chunk of the homeless population that does just that. And apparently they decided to do this in Stockton, California, because a large chunk of the city's population over there lives well below the poverty line. So they decided to give this a try over there. They're calling it a success. I don't know. What do you guys think? Do you think that's a good idea? It's basically, you know, a very early version of the universal basic income, but it's just designated for a select few at the moment in, you know, just this city in California. And I heard that Hollywood was kind of doing something similar as well. And I don't know, guys. I think at the end of the day, you know, giving people money because they can't afford things, you know, does incentivize at least some people to do less. But the reality is it's masking the real problem that affordability is off the charts there in California. I realize that these are complex problems, and I think that here in Florida we're going to start seeing a lot of those similar problems because of how much the cost of living has gone up here. And I don't know how Florida's going to handle it. They definitely haven't done anything to really handle it yet, besides this recent bill that we talked about, where, you know, they're trying to give people extra money to buy a home here as well. And speaking of that, let's cover this for the last story of the video here. 2 weeks ago, California launched this program called the Dream for All Shared Appreciation Loan Program. And basically what it is it offers first-time home buyers up to 20% of the purchase price of a house or a condo, and you could only qualify for this loan if you were earning below $180,000 in Los Angeles and $235,000 in Orange County. And as crazy as that sounds, probably for most people, it's probably still not really enough money for living in these areas of California because of how crazy expensive it is. So the original budget for this program was $500 million, but then Gavin Newsom, the governor there, had to cut it down by 40% to $300 million because of the shortfall that the government has. They're running this big deficit over there in California, so they had to cut this program. So already in less than 2 weeks, the program is completely out of money. Enough people already applied for this and have already qualified, and that's it, okay? They're done. So whoever got this got it, and whoever didn't. It's that simple. So here's how this works. The loan can be used for a down payment and closing costs and is structured as a second mortgage, which means it isn't repaid month by month, nor does it accrue interest the way an ordinary loan does. Instead, when the mortgage is refinanced or the house is sold again, the borrower pays back the original amount of the loan plus 20% of the increase of the home's value. So say you made an extra $100,000 in equity when you sell the house. You sell the house at some point and you pocket 100 grand, then you got to pay back the state of California 20 grand and you keep 80. Okay, so far doesn't sound so bad. And if the home is sold for the same amount that it was purchased for or less, then the buyer doesn't need to pay back an additional 20%. So basically how this works is the interest rate for a loan like this is dictated by how much the property goes up in value, which can work to your advantage, especially right now, considering the property values could be going down in a lot of areas, and especially in California, because they've had a big bubble there too with how much prices have run up recently. I wonder what's going to happen when people who qualified for this program buy a house and say if they want to sell it in a few years from now and they sell at a loss. Well, obviously they're not going to have to pay back this down payment, right? Because they're selling at a loss. But here's the issue. The way that this money is supposed to be used is whenever one person sells and repays the loan, it immediately gets lent out again to another first-time home buyer applying for this program. But if a bunch of people end up losing money on their real estate deals or just walking away from the homes in foreclosure or whatever, well, what then? All this money just kind of evaporates, and it's just another example of California trying to throw money at another problem. Man, it's just a band-aid solution. It doesn't fix the underlying problem that most people can't afford a house. And I'm not saying Florida's perfect and we got everything figured out, because we definitely don't. We have our share of problems too, but these guys need to start getting smarter. You know, these elected leaders need to figure out new ways to help people that don't involve just throwing money at everything, because I think they've been doing that long enough with a lot of different programs to see that that just doesn't work. It'll be interesting to see where all this goes. Don't forget to give this video an A for effort, guys. I was able to finish it out second half without getting totally drenched, luckily. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video, and if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.